We talked about the largest expansion in the world's history, showing you where housing is at its peak. What's next? Stay tuned, find out. Hello, welcome to the Wealth Transfer. My name is Terry Saka. I'm Chief Strategist at Cornerstone Asset Metals, and I do want to encourage you, if you have not seen some of the past shows, go and check out in the network TV section. It gives you the listings of the television programs. The television programs are on Uplift Television, which is in DirecTV satellite, and Sky Angel, which is in the Dish Network area. So please spread that word along. And you can also find us at cornerstoneassetmetals.com to look up those programs. You could also go to YouTube. I would encourage you to go to YouTube at Cornerstone Asset Metals because YouTube, you can subscribe there. And so when new videos pop up, they'll just come right to you. I'd also like to encourage you, go to Instagram. Instagram is pretty cool. I like it. Great photographs of God's money, 1-minute videos of teaching. If you haven't done it, I'd say go and open an Instagram account. It's pretty good. You could also catch me at Terry Saka AAMS in the Twitter. So please come on and visit us. We were talking last week about the economic side. Now, we had talked that the world is in the largest expansion in U.S. history, stock market-wise, economy-wise. To the point where it's back to even the pyramids, right, of 2500 BC. That's how much we've expanded over the last, about 10 years or so. So we talked about the expansion side. Then we showed where the actual dollar value was. We talked about housing and how the peaks of housing are at that point. And so if you haven't seen it, go back and see some of those past shows. If you're interested in that category of housing, you may want to know the information before you make your purchase. Then we started going into the market system itself, showing you how we've hit these peaks of the market. And I want to jump right in because the S&P 500, this is the large cap index. And this is a 20-year, and I'm sticking with this 20-year timeline. This is a 20-year monthly chart. And look at the triple top. Now, for those that are not into charting, this show is going to help teach you about it. Because triple tops mean it's expanded at the highest level it can, and then it collapses, and it does it again, and it collapses. So the first one on the left was the massive expansion into the 9/11 scenario, and we collapsed. The one in the middle was the expansion after that to 2008. Then we had massive collapse in 2008, and currently, most of us remember that one. Look at the expansion since 2008. That's right, the S&P is up again, and that index to a triple top, which means, folks, could it break out and go higher? Yeah, sure. But most charting indicators say that's a really big collapse ahead of you. Another way of looking at it, this is the S&P 500 index weekly 20-year chart. And on the weekly, you notice going back into the 90s, it comes up to 2000, we collapse. Then it shows going to 2008, then the collapse, and then the era of quantitative easing began. Quantitative easing was nothing more than the government or the Federal Reserve's way of telling you we're going to print money and issue debt we don't have anything to back up except taxing you more, right? So they started printing trillions and trillions of dollars and loaning trillions upon trillions to the world in swap line loans. And look where we're at today. These danger zones on these red lines to the black on the right side, that is a huge expansion showing us that the S&P on even the weekly is in serious trouble, or if anything, it's in the mode of I'm coming down. And so you just want to be prepared for that, right? Now, one thing to keep in perspective, too, that I've kind of liked as far as when gold and silver come in. I know a lot of people say, well, why would I want to buy gold? And silver has been down forever. But I do want to show this because it's a pretty interesting, chart. This is of the gold and the federal budget deficit. Now, this is a fascinating, fascinating chart. The brown is the gold price. The blue is the budget deficit. Now, we can go all the way back. It really doesn't matter. This is going back to the beginning. The deficit in gold prices pretty much kept in line. Gold is an indicator of money supply. So when the deficits come in, when we're printing money, gold and silver prices would rise. And when the deficits came down and we slowed that process down, the gold and silver prices would lower. But something changed. If you've noticed in the middle there, the gold and brown area stopped and started going down, and the blue exponentially exploded. That's not healthy. That deficit shift going forward, that's projecting going forward for the 18 months, by the way. And the reason I'm showing that is we, through the tax cuts, because we just passed this massive tax cut, which is good, but in the short to medium term, it's going to bring tremendous amount of debt to we the people. It's going to explode our deficit. That's why the president's so big on trade deficits, by the way, too. In the end, the tax cuts are designed so eventually it stimulates economies, people get jobs, they increase their incomes, and before you know it, you're able to contribute even more, you're able to buy more, you're spending more, and then once that solidifies, then it's all just what they would call the status quo. I mean, that will just be where we're at. But the gold price usually, if you've noticed in the past, stays very tight to the blue. So when the deficits increase, eventually gold is released and it will revalue. So where you see gold stop, that's our current time frame today. Going forward is our explosive deficit increase that's projected, and I don't see it get worse. Actually, I see that projection, in fact, I don't see it get better for us. I see it get worse, because that projection is all based on a solid global economy moving forward as we've been, which I contend something's going to change. It just is, and if that's the case, that blue line's going even higher. Well, the gold has to track that. It will eventually. Well, why isn't it happening now? Why isn't the gold price going up now? Well, it's because it's manipulated. Now, you can go in and there's going to be the debate about it, but the manipulations are real. They're derivatives. Now, what's a derivative? A derivative is where they sell gold and silver in the market system, in the futures market, controlled by the COMEX. They sell futures contracts that controls the price. And they're selling contracts for delivery that they don't own the physical metal to back it up. So, for instance, in silver, they have sold literally 800 ounces of silver on paper for every 1 real ounce in the vault for delivery. That is amazing. So there's 600-700 people on one side of the street, 1 ounce on the other. Go, right? That's what's controlling the price, mainly. And then you got hedge funds jumping in, shorting gold, and it's all a momentum trade at that point. All I'm saying is gold will revalue because gold and silver don't go up and down. It's all tied into this fake paper currency system. And eventually those reins will be taken off because the globe will make it come off. The world will make it come off. And when that happens and gold revalues back to the deficit levels we have today, we're looking at well over 2,000 gold. So that's gold to the high, folks, and silver to the high is a 200% increase. So for every $250,000 stock account you have right now, just for sakes, not that you do this, but if you had $250,000 in silver today and we revalue back to that high, that's a $750,000 account. That is exceptional. That is a wonderful diversification. I would be diversified, but that's a personal decision. I was just merely using that as an illustration. The best way you can get started is to first contact somebody who cares. Cornerstone Asset Metals has somebody standing by to call. The information is phenomenal. They'll send you a package of materials. I encourage you to get registered. Register for information. If anything, get the process started to learn why. and here's a good place to do it.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. Now, I know Cornerstone, I do want to reiterate, they are standing by if you want to give them a call. I encourage you to register for information. They send out an excellent package for you to view so you can kind of get an idea of what's going on currently. We want to just show what we do here at Wealth Transfer is we like to show what's happening in the charts, in the data, in the economics globally as well as in the United States. And we want to do that in a way that, slowly over time you'll gather that we're at some, peaks. We're at real high levels of valuation. We are at the largest currently expansion of any economy in the history of the world. I mean, this is a massive expansion right now. Now, we joke about going back to the pyramids, but the point is this is the longest expansion in U.S. history. We have printed trillions upon trillions of dollars. And we just showed how the housing market valuations compared to what we're earning are at peaks. We're showing you how our expectations are far greater than the reality of average hourly earnings. That's important because if we're not making more money and products, goods, and services are becoming more expensive, then there's the inflation aspect. So then we got into that. Then we got into a little bit of the market system, the Dow Jones, the S&P, showing you how we're at triple tops in the S&P on the monthly or on the weekly. So you go 20-year period, you see we are at this time. Now, 2008 was created mainly from collateralized debt obligations, which basically means let's do it this way. A finance company would buy a mortgage. They would take, mortgages are rated on, from poor to strong based on the credit rating and the ability for someone to pay it back. So there would be these junk bond mortgage types. These would be the real high profile, wealthy, high credit score types. And they would, subprimes they would call them, they would mix them together. So they would take a big chunk of subprime mortgages and they would mix them with the really strong mortgages. They would put them all into a box and call it Derivative A. Now this Derivative A became an investment at Wall Street. So now money managers can invest into Derivative A, which is made up of a big chunk of poor quality mortgages and a big chunk of high quality mortgages. And the theory, and I say that, kind of smirking, the theory, and if you read the reports on it, I forget her name, I'd like to get her credit for it, but she was at JP Morgan Bank. Brilliant analyst. She saw it coming. And she said, wait a minute. What happens if? Now, for those that don't remember 2008, this was all revolved around mortgages. There were people in 2008 getting mortgages that couldn't even afford the house. I knew someone who got a mortgage and bought a house who didn't even have a job because they were doing these mortgages with no income stated on the documents. So in 2008, we hit this peak. People were buying houses, the houses were peaking, and it was just going ballistic. But she said, okay, so we're doing this with the mortgages. We're putting in the subprime with high quality mortgages So basically, if the subprime default and go into foreclosure, then the big ones would pick it up. But what happens, and then they didn't do this analysis if it's regional. They were going, well, if it's California or the West Coast versus the East Coast, if one fails, then we'll be okay. And if this fails up here, this region will be okay because these will be okay. And this is the kind of analysis they were doing. What they didn't calculate is if there were failures in the mortgages and foreclosures throughout the whole country. And that's exactly what happened. So in 2008, you started to see systemic foreclosures on houses because people were buying homes they really couldn't afford. And then when someone got laid off from a job, which we had a tremendous job loss in 2008, they lost their home. And so they didn't project that. And hence we have the CDO nightmare, which they call the Great Recession, which really turned into a Great Depression, because now these boxes of investments that were known as, collateralized debt notes and derivatives of housing became worthless. And they crashed. That's why you see, to this day, I don't know if many remember, Wachovia, big bank, United States bank, went out. Washington Mutual went out. Lehman Brothers, Bear Stearns. Now, Bear Stearns, Lehman, these were big financial companies, 140 years old, and they just got blown right out. I had clients and people at very high levels that would tell me how the banking industry was handling this. The secret room, the boardroom meetings. If you hadn't seen the movie yet, go see, what is The Big Short, I think it is? The Big Short. Wow. Watch The Big Short because it's truthful documentary, but yet a movie about what happened in 2008. And it revolves around the gentleman who discovered the fraud in the calculation of housing and how everybody was in on it because everybody was making money. And they realized it was bad. They realized it was going to collapse. And everyone thought they were crazy, but then a handful of other people picked it up as well. And I'll never forget the end of the movie, which I'm not going to tell you exactly how it plays out, but we all know the system collapsed, right? I'll never forget the one guy who made billions of dollars in profit. Everyone's like, wow, you're like a great investor. You did all this. You did great. And he said, you know what? It doesn't feel real good. I may have made a fortune, but how many millions of Americans lost everything? It wasn't right. The other gentleman who was the mathematician, I wish I had his name, the mathematician, he was a little just kind of crazy. He'd be in shorts and he's managing all this big money. He's the one that discovered it. And he ended up, shorting the housing in the financial system, and all of his hedge fund people were freaking out on him, and he wouldn't let them out, and he said, no, just wait, no, just wait. Made billions and billions of profit. He tried to tell the U.S. government how he identified the fraudulent accounting that was going on in the market system. And this day, from my understanding, no one's ever contacted him to understand how. It's because they knew, folks. So you see, that's what got going in 2008. And it was all paper and it was fake. And it collapsed our system. This time around, we've printed trillions of dollars that we've never done before. Globally, we've printed trillions. And the real big one, we've issued debt at such an unbelievable limit, 150 trillion in debt worldwide since 2008. Obviously, we are going to have an economic expansion since 2008, right? But there's something inherently wrong underneath. Although we've expanded, it's been on the expansion of fake money currency printing and debt issuance, which would be bonds. So the whole world is kind of in on this together, but know that there's players like China and the BRICS, and the BRICS would be the Brazil, Russia, India, China, South Africa. So 2008 was started from these CDO mortgage investments, and it completely just about collapsed the entire world system. That's how fragile all this is. I give them credit, they're pretty smart, but they're Luciferian smart. They're on the devil's side, and I'm saying that because a dishonest weight and measure is an abomination, says the Lord. Honest scales are a delight. Proverbs 11:1 and a few other proverbs that talk about a dishonest weight and measure. Do yourself a favor and be wise and at least knowledgeable on the alternatives that you have, and especially tangible assets. Get information, and if that way, when you're ready to diversify, you'll be ready to go, because it takes time. There's a process in taking portions of your IRA or retirement and putting it into a tangible asset. And you could do it pretty seamlessly with very little cost. So it's a really good way to be diversified. And I always like to say minimally be third of your account in precious metal of some kind. And I like silver because silver here to the high is a massive 200% return. So, getting educated is important. Do yourself a favor and don't put it off. We have had this great expansion. We are now in the greatest expansion in U.S. history. Don't put it off until you wake up one day and go, what just happened? At least take down the information, give them a call, register, but if anything, be informed. And here's a great place to get started.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. So it was important to explain that because I wanted you to understand how the collapse happened of 08, even though most of us probably do by now. There's always, it's always good to refresh. Because right now we're on the heels of massive money printing and debt issuance. And so I want to go back to this one more time as to why. So when this type of debt has been issued, as I showed you in the chart of expectation going forward, gold and silver have always been revalued minus derivatives and manipulation to the true money supply and the true deficit supply in money printing. It always has, it always will, and we're going to get into why. But I want to look at this gold chart one more time. The brown and the blue, you notice, move together. And the brown is the gold and the blue is the deficit. Gold will follow that blue federal deficit line, which means we will see gold very shortly at 2,000 an ounce and silver back at 50 and more, and that's a 200% return. So why is the pressure there? Why is the pressure globally there for us? It's mainly this, 100%, and we've done a lot of talking about it, and we're going to do a lot more going forward. One belt, one road, how the Chinese trade will cross the world. And if you've noticed, from China in the red on the top is the belt, underneath in the yellow is the road, and it's maritime. They own the shipping lanes, the ports, they own the rails, the trucking. China controls the world's trade. They did take over the United States and the world's largest trading nation just a couple years ago, and this one belt, one road comes more than just trade. They're ditching the currency, they're ditching the dollar. For those that don't know what the petrodollar is, I want to show you this video. This video will give you a full explanation as why the dollar's days are numbered and why we need to be concerned. Check this out.
It's a term millions of Americans don't know, petrodollar. But the petrodollar system is the fabric that right now holds our economy together. The dollar became the world's reserve currency in 1944 at the end of World War II. Before World War II, the British pound held that role. Now, the dollar became the most important currency in the world, thanks to the U.S. having more gold and power than any other nation. But August 15, 1971, President Richard Nixon detached the U.S. dollar from the gold standard. The U.S. dollar no longer had gold as its backing. So what to do? In order to keep the dollar from crashing, because it was no longer attached to gold, the U.S. government attached the dollar to something else. Between 1972 and 1974, the U.S. government completed a series of agreements with Saudi Arabia to create the petrodollar system. Every barrel of oil sold by the Saudis had to be in dollars. Saudi Arabia was chosen because of its vast petroleum reserves and its dominant influence in OPEC, and the rest of the world followed suit. So the dollar, no longer tied to gold, but is now tied to oil. So how does it work? Well, it's pretty simple. If Italy wants to buy oil from Kuwait, it would have to purchase U.S. dollars on the foreign exchange market first to pay for that oil. Dollars for oil is a big reason foreign countries keep dollars in their reserves. Part of the reason we sell so many bonds around the world to finance our debt. So what if? What if another country wanted the same kind of world power over oil the United States has had for 38 years? Well, in order to do that, they would have to have huge gold reserves, a booming economy, and consume enough oil to warrant unhinging petroleum from the dollar into another currency. Enter China. What our media will barely talk about, the Chinese have now entered into 11 international agreements to trade products, including oil, without using dollars. China now has a currency swap deal with Brazil, Japan, Australia, Russia, and Iran. And get this, the deal with Iran, which produces crude oil but they don't refine any, it's just junk for oil trade. Because of UN sanctions on Iran, U.S. dollars cannot be used to buy oil from Iran. But that doesn't mean that Iran isn't selling oil, because they are. Goods including wheat, soybean meal, and consumer products are being traded by China and India for oil. One more thing here. For 38 years, the Saudis have protected the petrodollar, but that could change. The world's largest oil refinery is now under construction in Saudi Arabia, and it's being built by, you guessed it, the Chinese. China now actually imports more oil from Saudi Arabia than the United States does.
They're no longer using this as the peg in the middle. Countries are doing deals without the dollar. And if we're not using the dollar, folks, because the Chinese are going to be expanding this way, what is that going to be for your standard of living? What is that going to be for your future? If you want a secure future, if you want to preserve your standard of living going forward, when you see what's coming up in the next few weeks and how China's systematically taking down our superiority, you'll know it's time to be diversified. I'd call Cornerstone. They'll talk to you, register for information, at least get started. And until next week, God bless each and every one of you.